I'm going to take you on an overview of the whole specialist market sector. That'll hopefully give you that overview and an insight to what's going to be covered over these 4 days. So I want you to sit back and I want you to reflect about 2020 and how it affected your business with COVID-19. And I want you to look to the future. And I want you to think about how you would aspire to grow your business and obviously increase your profitability. And I truly believe that specialist lending will give you that edge. And you're going to hear some incredible speakers over the 4 days that are going to do a deep dive into criteria. What I want to do today is to give you that high level overview of the whole dynamics of specialist lending. When we look at high street lenders, they're in direct competition with you at the moment, and their aim is wherever possible to regain their profits. High street lenders, by having to adapt to COVID-19, have got some really long backlogs, but it does differentiate between employed and self-employed customers, with the self-employed having a much longer waiting time. And now we're seeing restriction on the LTVs. It's because of their inability to actually underwrite the self-employed and the underwriters to have the skill sets to be able to read accounts and correlate to bank statements. We're also seeing high street lenders decline cases because of adverse credit, very small CCJs and defaults. Possibly they had them at the time on a previous application, say 4 years ago, but now their appetite for any form of near prime is zero. What happens when these customers get declined? Do the high street lenders who you work with actually say, why don't you Google your nearest mortgage broker and see if they can help? They don't do that. This is why it's so important that you have a presence on the digital high street and your business remains relative, particularly to the new world where we've all become much more digitally savvy. Does your website explain to a customer all the different areas that you're able to help? I.e., do you have a designated page to adverse? And what actually is adverse? Most customers have selective amnesia or actually think it's got to be something significant like a CCJ or a default. But in reality, it can be just 1 month's late payment. Making sure that you understand the opportunities and the challenges in the lending market this year. Let's take a look. We all think of COVID-19 has got economic problems and situations, but we do forget about the impact that Brexit may still have on our economy. But I'm not going to go into those details because I don't think anybody actually understands how the economy is going to fare this year. So let's look at the things we do have control over. Product transfers was an important part of your income stream during the first lockdown, and it still remains important, but it's about keeping relevant and in front of the customer. Lenders are now trying to get more and more product transfers direct, and working with the comparison websites, it gives them that ability to be able to do this. So if you've got customers in 5-year fixes, keeping relevant and in front of them and in their minds. Consider and make sure you do at least one annual review. This can easily be done by WebEx or Zoom, but it's about remaining relevant all the time. Customers' personal situations are changing far faster and far quicker. And having a deep understanding of the technical aspects of mortgages becomes key. Not for you to become tax advisors, because in no situation should you ever advise on tax or stamp duty. But you need to have an informed understanding that a customer wants a conversation. You're able to explain the differences, but not give advice. When it comes to tax, the biggest single change is now the inability to offset interest on a privately owned buy-to-let, except for a holiday let, but also understand the implications of stamp duty. It's about keeping yourself relevant. And Help to Buy now moves into phase 2 with the conclusion of Help to Buy 1 on the 31st of March. Understanding phase 2 and the way that it can help customers, those possibly with challenged credit, low deposit, and maybe wanting to work with Forces Help to Buy to be able to purchase properties, is a real solutions for the customers, and Precise Mortgages certainly has a range of criteria to help those customers. But also thinking about shared ownership, which is another affordable solution that Kent Reliance has a policy for, and it's about understanding that criteria. I don't think we're going to see a base rate increase this year, What I would say is the use of technology has fast forwarded more than ever. Imagine lockdown without the internet, without smartphones. But are you effectively using the technology? Have you updated your customers' up-to-date email addresses? Are you sending out newsletters? And are you arranging FaceTime appointments? Embrace technology as much as you possibly can. It will give you the edge. But one thing you need to do personally is invest in your own specialist knowledge and education. Have you come on to one of our specialist buy-to-let or specialist lending webinars? Could be on residential, could be on reading credit files, it could be on reading accounts. Make sure you spend time upskilling your knowledge and you have a deeper understanding of the marketplace. Lender innovation is going to be a key part of your growth moving forward, and it's been dealing with the specialist lenders that have innovation at the heart. Take the self-employed. How confident is your knowledge about the criteria when it comes to lenders that specialise in the self-employed? Take a mortgage broker, employed for 3 years. 18 months ago, go self-employed. And on the second year's projected income prepared by a chartered accountant, the income looks like it's substantially going to go up on that first year's trading. And you want a lender that may consider using that projected income. Then Kent Reliance is a lender to investigate further. Or customers who want to add back in deductions like private pension contributions and private car salary, or being able to take an objective view of the way the accounts work, and Precise Mortgages is a lender you want to look further to investigate. It's lenders that have great service and turnarounds. Precise Mortgages at time of recording is 2 days turnaround, and Kent Reliance is 3 days. And it's about understanding first-time buyers' requirements. The average first-time buyer in the UK today is 33 years old, has about £44,000 of joint income and 2 children, and they aspire to home ownership, but maybe being turned down by a high street lender and want a little bit about education when it comes to adverse. A lot of first-time buyers may think that they've been declined because of something large like a CCJ default, but it could be something as small as unsecured arrears, or maybe using a payday loan to actually improve the credit score. Make sure you're able to educate, upskill, and help these first-time buyers move forward. And complex credit, lenders like Kent Reliance don't credit score, and that in itself is a unique stand. But it's about maybe looking at somebody who is a nurse and their secondary job is a bank nurse, and being able to have a lender that would use 100% of the income. Or maybe a landlord who's got a substantial large portfolio and a complex arrangement. Lenders are here to help you. If you look at lender innovation, I think Precise Mortgages refurbishment, refurb buy-to-let product is something to get further information on, and details can be found on the website or with all things through your BDM. If you've got a landlord that requests what lender would allow them to purchase a property which is currently in an unlettable state, be able to do some minor alterations, maybe it's to replace the boiler to a combi boiler and double glazing to get an EPC rating of a D, to then refabricate the property by replacing carpets, curtains, and maybe replace the kitchen. You're looking at about maybe 2 months' work. And at the end of it, you want that lender at the same time to issue a second offer based on the end value once the works have been done, on up to a 35-year interest-only buy-to-let mortgage. Then look no further and look out for further details on this. So lender innovation also covers new build, which we'll see changes as we move forward into the future, lending into retirement, but intergenerational finance. So intergenerational means about embedding yourself into a family as a whole. Take first-time buyers. Statistically, quite a percentage of first-time buyers are waiting for an inheritance to purchase that first property. By doing intergenerational finance allows you to be able to speak to nana or granddad and do equity release. So it's not about doing a single transaction. It's about doing a combination and embedding yourself into that family and adding value. So every challenge brings us an opportunity. So what are the opportunities that we can look forward to when taking a wider view at the specialist lender market in 2021, and things that we're going to bring alive during these 4 days? First is houses of multiple occupation. If you're working with your large landlords that specialise in student accommodation, and you've got landlords who've got 10 to 20 bed student accommodation, possibly with some multi-units within the building, then look no further than Interbay Commercial and about understanding the criteria and how this lender can help. Also, understanding Kent Reliance's policy. If you have a first-time landlord who wants to purchase their first property as a HMO, is something, again, they can consider. But understanding Precise's policy of what really is a small HMO, the definition of a HMO itself is a property that's occupied by 3 or more people, comprising of more than one family unit, sharing one or more facility. So if you've got a customer who says, I want to buy a property, a 2-bedroom street house in Birmingham, and they're going to rent it to 3 students, would you automatically check whether or not that property lies within an Article 4? Check with the council to see whether or not a planning application for change of use, purely and simply because this would be now classed as a HMO, would be worth doing. In the majority of cases, it's best to check it out and most likely end up not proceeding in that particular property because it would be classed as a HMO. The changes in appetite for limited companies also grown. The reason that people are attracted to limited companies is because they're able to have 100% interest relief, unlike privately owned buy-to-lets. They've also benefited on an industry average of a 125 ICR. But it's about understanding a limited company. Is it a limited company or is it a limited company SPV, specific purpose vehicle? And this is where on incorporation, and since 2016, you have to have a SIC code, standard industry classification, added to its incorporation to define what that trading business does. And next, you need to know who owns the shares. So is it the directors or the shareholders? Are the shareholders, say, the children of the directors? They could be 2 and 3 years old. Or is the shareholding held by a trading or a holding company? These are all the questions and these are all the solutions that we're able to help you with. Understanding the appetite and requirements for tenants to want to possibly live in a multi-unit, a 1-bedroom flat. Because of COVID-19, they don't want to do a large house share in a HMO because they do not want to share a facility such as a bathroom. They want their own personal facilities, and therefore you may see a rise in demand of multi-units in the future because of the way tenants are selecting their properties. And holiday lets have seen a potential rise in applications because many people now in the UK want a staycation. They don't want to go abroad because of the recent changes, and particularly for older people may find staying in the UK appealing. Landlords who understand holiday lets and the benefits that privately owned holiday lets fall outside of the restrictions on interest relief. In other words, they can carry on offsetting all the interest. They can also take the profits and contribute them into the private pension. And they also will benefit when selling the properties, the rules stand at the moment, to entrepreneurs' relief on capital gains. And those landlords that have large portfolios in personal ownership that are no longer able to offset the interest because of the new regulations may want to consider moving that portfolio by sale and purchase into a limited company. As with all things when it comes to tax, never ever give tax advice, but make sure specifically in these complex situations that it's a specialist tax advisor that's giving the advice and you're just following the instructions. And as we see more and more high street lender declines, where they just tell the customers they are unable to obtain a mortgage, they don't ordinarily pass these on to you. So it's making sure that when it comes to adverse credit, you're able to explain to customers how you can assist them, whether it be CCJs, defaults, or simply just late payments. Understanding bridging finance, or what I would call short-term lending. There is an awful lot of customers who are caught in large chains that need to complete before the 31st of March. Make sure all your customers are in an informed position of what it would cost to use short-term lending to be able to step outside of the controls and restrictions of a chain, to be able to move into their dream home on the day they want by using short-term finance. Get a cost to how much it would be to borrow the money for a month, 3 months, 6 months, 9 months, and a year. And that way it's down to the customer to make an informed decision of having that control. And when looking at remortgages, always consider a second charge. A second charge has an awful lot of advantages when considering a remortgage. For instance, a customer is in a 5-year fixed with 3 years ERC period, and they would like to capital raise to do an extension for a third bedroom or a home office. By considering a second charge, raising say 50,000, doing the works, and then when they're out of an ERC period on that first charge, you could simply remortgage both mortgages. We will go into that in one of the specific days. And understanding that 5 million self-employed customers do need your help. So think of going on one of our educational webinars and upskilling what you're trying to do. So what we wanted to come really was just an overview of the opportunities of specialist lending. And I hope you've taken some of the key opportunity areas of growth. And if you've got further knowledge and you want to aspire to this, then I'm sure these 4 days will really help you. So we're now going to move to the questions phase. If you've got any questions, I think you know how to put them in the chat facility, and hopefully we can be able to answer them. Thank you.